Good afternoon, everyone. In today's video, we're going to do a quick walkthrough on the S&P, the Dow, the Nasdaq, along with the Russell Futures, and I'll also talk about some stock setups that overlapped when we had our futures setups being breached, or at least the futures volatility box. Then at the end of the video, we'll also talk about gold and silver if we have some time. Starting with the S&P futures first, and you should notice that these setups are pretty similar across the board, at least for the four indices. Now, the first breach of our futures volatility box came in that 11 to 12 p.m. Pacific hour, so 1 hour before the market closes, and then the second setup came in the actual hour, the final hour of trading the markets. So we had two different opportunities to quote unquote buy the dip. That was a setup really. So starting first with the S&P futures in that 11 to 12 p.m. Pacific hour, we first had a breach of our volatility box. This was now towards sort of the end of the hour, still at 11:45. Our cutoff is at 11:50 in terms of breaches of the volatility box. And we first breached our scalper volatility box right here. That's a breach of these cyan lines. After we breached the scalper box, we're looking for an edge signal confirmation. That edge signal didn't come until we went outside of the box. And so that then took us from our scalper to our aggressive models. So if I then load in our aggressive volatility box here, then via the aggressive volatility box, we had price action that was a little bit more contained, right? We had, again, a breach of our volatility box cyan lines, and this time we had an edge signal in which we still hadn't broken outside of the box. And so this was the model that we chose to use in terms of that first trade into the S&P into the close here. So this was the trade triggered right around 11:45-ish, right? That's when the first breach happened, 11:47 actually. Then we got the edge signal at 11:51. And once we got the edge signal, the trade was a go. We still had plenty of opportunities to enter at the cyan line or better. For those of you that trade the micros, you'll notice you had the same exact setup via the micros here. If I come into a chart of the micro ES futures, right? It's a very similar setup, so you can scale the risk based off of your account size. And if you don't even like trading futures, for example, you could also use something like SPY as an alternative asset class to trade these futures volatility box trades. Now, I'll come back to the full-size futures chart here, but once we had a breach of the volatility box, that was then our setup in which we were actually triggered. Now, the risk on this trade was 10.25 points, which is the distance between our cyan line and the outer edge of our box, and we were looking for that same distance on the opposite side. To give you an idea of the actual distance that we ended up traveling, that was close to 12.25 points rounded down on the S&P. And so you did hit the first target, but we didn't hit the second target, which was the other side's gray target line, about 25.75 points away. So on the case of the S&P, we only hit the first trade. Then we were on the aggressive box into the final hour of the market where we didn't breach that guy. But if you come in back into the scalper here, you'll notice on a much more aggressive scale, the scalper volatility box ended up breaching that cyan entry line, and that gave an even nicer reversal hitting both the T1 and T2, but of course this wasn't valid. Now, I know a lot of you tend to still be a bit more aggressive, especially when it's something just like this, where it's not a decisive break outside of our volatility box clause, but more so a break right here, and then you have a reversal and you use something like the SPY options. I do think that that's an interesting idea, but based off of our trade plan rules, we were on the aggressive box into that final hour. Now, if I switch gears and we switch over to something like, say, the Nasdaq Futures, the Nasdaq Futures looks similar here. Now, the Nasdaq Futures, I think, hit more on the trade idea that we've been talking about recently, where you use the underlying ETF options as opposed to the actual futures contract for a way to try and be a bit more aggressive on these trades. That's where, as long as price action is inside of these zones, that's the other side's target line, along with our entry line, this gives you a place to start to build a position using the actual options, right, on the futures market. So in this case, something like the Q options here, where as soon as we breach our volatility box entry line, that happened right here, we're looking for an edge signal. We had the edge signal right here, but we never got a pullback all the way back down to the cyan line. So in that case, we still had this chop around sideways. And for those looking to be more aggressive, again, highlighting the fact that this is a much more aggressive strategy here, then as soon as we come back inside of this zone, really what I call a zone, which is the distance in between the cyan line and the gray target line, that's where you can then start to build up the options positions in the queue. And this is really the first phase of building up the actual position. So now in this case, you have the Q options right here. If you come all the way back down to the cyan line, that gives you an opportunity to build up the actual futures contracts positions. But if not, then you still have at least a little bit of your foot inside of the door, if you will, in terms of a way to participate in this move if we did get the reversal. Now, in the case of the Nasdaq Futures, the bare minimum move that we were looking for was 34.48 points. Let's round that up to 34.5. And you ended up going all the way up to 68, almost 75 points, actually. And so that was your really nice reversal in the Nasdaq. Now we had a second breach as well in the final hour of the market, where again you had price action breach our volatility box entry lines. This time we got the edge signal, but we weren't inside of the zone. The zone here was much more collapsed, right? It was really the cyan line or bust. But even from that point, once you got the edge signal, you still had the follow through. So it was nice to see the volatility ranges being respected, even on their most aggressive scale in the Nasdaq futures, which for all of our members, you should also keep in mind the note that I sent out in the morning, which was the Dow starting in the morning was the one that was much more aggressive out of the gate, the one that was breaking all of our volatility box models compared to the Nasdaq, right? So the Dow here on a bullish scale was much more bullish, if you will, where we broke outside of even the scalper volatility box, compared to something like the Nasdaq, where on the Nasdaq here, you'll notice the scalper was way above price action in that first hour. All this to say, the Dow is the more volatile market in the morning, and the market that signaled to us that it really wanted to run out of the gate on a much more bullish directional bias compared to the Nasdaq, which I found interesting, where into the close here, you again had the Nasdaq fall into the scalper volatility box versus something like the Dow, in which we were on the conservative volatility box based off of the morning, which again kept you out of trouble in those hours, didn't give you any breaches, but it also kept you out of some losses, right? If you come back to the scalper volatility box here, you'll notice we broke outside of the clouds, The conservative was the only volatility model that actually held the price action in the Dow starting the morning. And we saw that the conservative then helped keep us out of trouble here in these markets. The final market that we had was the Russell. So if I switch over to a chart of the Russell, again, loading in our scalper volatility box, that's the one we were on in the Russell. Then using that same hour, starting with the 11 to 12 p.m. Pacific hour, we had a breach of our volatility box lines, and we ended up having a very quick reversal before having any sort of edge signal confirmation. So we hit the first target before really getting an opportunity to participate. Then the Russell came back down, started chopping around in between the cyan entry lines. The retest is invalid, still looking for that edge signal, and price action just continued to break outside of our clouds. Now, the edge signal only came towards the edge of the hour, and as we just keep scaling down in terms of volatility and adapting to the volatility conditions that we see, we went from our scalper to our aggressive. And even the aggressive volatility box models were broken before we got the edge signal confirmation. That then took us to our doomsday aggressive models, the next one in scale, where these were the models which were then respected, right? We had price action breach our doomsday aggressive volatility box entry lines. We then got the edge signal, and right here was the point in which the trade was valid. So you still got an opportunity to enter at the cyan line or better. In terms of the risk that I was looking for, at least the bare minimum target, that was a bare minimum target of 5.8 points, and we fell just a little bit short here. And this trade ended up becoming an actual loss by missing the trade for 0.4 ticks, right around there, actually 0.5 based off of the actual entry. And so that was a little frustrating, right, in terms of the actual trade, where we missed our target by really just a handful of ticks, and then price action reversed going outside of the volatility box clouds, where then we still saw another reversal into the final 45 minutes of the market open. And that was a little bit frustrating in the sense of the actual trade turning into a loser, which you otherwise had a nice winner on, a 5.4 point winner, where we were looking for 4 more ticks, but we fell a little bit short. And so I think that was just a trade-off in terms of following the actual trade plan rules, something that I'm happy to live with, considering that in the ES, for example, we were able to pull out 10.25 points compared to this loser of 5.8 on the Russell. So I thought that was interesting. It was a little frustrating, obviously, in terms of missing the actual target by 0.4 ticks, but that was a loser for, again, the actual trade plan that we use to trade with. Now, we also said that we take a look at some stocks. So around the same time, actually, before we do stocks, I'd like to just visit a chart of the gold futures here. So gold off of our scalper volatility box. This is a new model that we added as of 2 weeks ago for gold. You'll notice that, again, gave you a pretty nice opportunity where price action fell into our volatility box cyan lines, chopped around sideways, got multiple edge signals, 1 and 2, and then from that point, price action in gold tended to reverse. Now, if you contrast this with silver, for example, you'll notice silver was much more volatile. And this is a stark contrast between the charts between gold and silver, right? So in the case of silver here, you'll notice price action went outside of our volatility box. And again, before we had any edge signal, the first edge signal, which is really just our overbought, oversold confirmation signal, came right here. And outside of that, we had already broken outside of our scalper volatility box. If I contrast this with our aggressive volatility box right here, also went outside of the aggressive volatility box lines. Then we come to our doomsday aggressive models, and this was the model that ended up adapting to price action, where once we had a breach of our volatility box entry lines, we got the edge signal, we still had them broken outside of our clouds. Now at this point, we were looking for a re-entry in silver, which we never got, but to give you an idea of what the risk reward on this trade would have been, that was risking right around 191, 190 if you want to round down silver ticks. And in terms of the actual move we got, you'll see that was close to 326. So definitely much more than what you were risking. But even in terms of looking for that aggressive entry inside of this zone right here, the gray to cyan line zone, we never got that retest. So this was a trade in silver, which we just ended up having to see work out without being able to participate in it. But gold, on the other hand, did give you an opportunity to enter. Now, I'll end this video by contrasting some stock trades here, where when we had a breach in our volatility box price action on the futures markets, we also had a flurry of stocks hit our live scanner on the stock volatility box. Now, those trades came toward the final hour, so this was in the 12th to 1, or the final hour of the market, where, for example, you take a look at XLI. This was one that hit our scanner, right? And I'm looking at just the larger names here. I think the names that most folks at least enjoy trading. So if we take a look at XLI, we had a breach of our volatility box clouds. This is the entry for our stock volatility box. You then had an edge signal confirmation. We never got that same retest, very similar to some of the more aggressive markets that we've been looking at. But in terms of looking at the models actually panning out, you then ended up hitting the actual target, which is this gray target line right here. So that was XLI. Then if I keep going down some other stocks here, UNP did give you an actual opportunity to enter, right, compared to XLI, where we had a breach of our volatility box clouds. You then got the edge signal confirmation. We then had an opportunity to enter at the clouds or better, and you ended up hitting the actual target line, and you just went a little bit above into the close. So now keep in mind, these are, again, much more aggressive trades, but for those of you that have access to both the futures and stock volatility box, you can see how both markets work together here, where you have the futures volatility box signaling to you that there's volatility occurring in the marketplace. Of course, you can also gather that by looking at the actual futures charts, and then translating that to taking advantage of some of the larger cap names that hit our stock volatility box live scanner, even outside of that 10 a.m. Pacific zone, typically our cutoff time, right, for the stock volatility box. Well, even outside of that, when it's these bigger, larger cap names where you still have the futures volatility box setup also supporting the idea of looking for a bounce, you'll see how some of these setups end up working out. Now, the last stock that I'll take a look at is space, and this is one that I think has been on a lot of folks' radars. It's not necessarily a larger cap name, it's just one that I think is a little bit more popular, where again, very similar. You had price action breach or volatility box clouds. You then got the edge signal. You then had an opportunity to enter at the clouds or better in this retest. Now, in the case of space, you still fell a little bit short of the target here, but even into the close, all trades being closed at the actual close here, you still were able to get a fairly nice gain in space considering the risk that you had to take, right? This is about a 1% move in space into the final hours of the market. And in terms of the actual risk that you had to take on this trade, if we take a look at the beginning of the clouds and compare it to the outside of the clouds here, that was right around 1.22%, where you still had a fairly quick winner in space, but it didn't quite hit the target that we were looking at, but again, not one that we're looking to hold overnight. So all in all today, we still had a good amount of volatility, but we saw this volatility really enter the marketplace into the final 2 hours of the markets, at least in terms of what we deem to be volatile markets. That's where we had the S&P hit the scalper volatility box lines. We also talked about the Nasdaq. We saw how the Dow, while it broke outside of the actual volatility box clouds, was the most volatile market. And then we also had the Russell, where we ended up going outside of our volatility box clouds, missing our target by just 4 ticks. We also discussed gold and silver, contrasting the two different markets there and the volatility we saw in each, along with XLI, UNP, and space to give you an idea of how stocks look like in the same period in which we had the volatility in the futures markets. All right, hope this video helps to give you a quick recap of today's price activity, and we'll see you in the next update. Take care, everyone.